So sometimes I open the show with Pump, Baby, Pump. Today it's Pump, Baby, Pump, raise, raise, raise. Just pump it and raise it. If we just keep raising debt ceilings, who cares what the debt is? This person just said the stock market is on some drugs the past few months, more like the past decade. What kind of guitar do I have? I have a Takamine, I think how you say it. What song have I been working on? I really like stuff by Luke Combs, so I pretty much try to do anything by Luke Combs. I tried to do his new song, South on Ya. No. I feel like you need to have a pretty decent voice to get through that one, but alrighty, let's see. So the news of the day and what we're talking about in the chat before we got going was the debt ceiling and so on and so forth. So let's take a look at that. I want to start with, let's start with the where's my job stuff? Jobs here. Okay, I don't know why this is in black. I don't like it, but whatever. So I posted on my Instagram yesterday. By the way, if you want to follow me on Instagram, I post some stuff at TraderMo_EM, and here's Paul, and here's Seth. But I posted yesterday, I went to Chipotle for lunch. There were 4 people working there during the lunch hour, and there were 3 people in the back that were chopping chicken and stuff, and there was one person that was running the entire line. So she would do the rice thing, and then she would move down the line, and she was running the cash register too at a 12:45 lunch line. And I posted on my Instagram and I said, if you cannot get a job in today's economy, that means you are an unemployable person, or frankly, you don't want to work. But right now, the U.S. has a record 10.9 million job openings. 10.9 million jobs available in the U.S. in July. Unfilled unemployment opportunities are swelling, even as some 8.4 million Americans remain out of work. There is a lack of applications, and I passed the McDonald's yesterday. We're hiring. No application needed. I was at the Cleveland Clinic. They're hiring. Everyone is freaking hiring. Panera closed next to Dom because they don't have enough workers. There's the McDonald's by my house. They're closing 2 hours early because they don't have enough workers. So One thing that needs to change is the ongoing health risk when it comes to, so obviously I said this back in May, the service industry, it's tough. Here's Gio. He just said, I own a restaurant here in the Bay Area. It's tough around here. Let's see. So at the same point of people not going to work, we have people quitting their jobs. So that's not good either. The U.S. has added 235,000 jobs in August, excuse me, well short below the 733,000 median estimate of economists. Hiring in leisure, hospitality. The reason I say all this is because, just liken it to the economy. Let's just go here to Yahoo Finance. Jobless claims right here. Hold on. Why is this doing this? U.S. weekly jobless claims near 18-month low. So they said that, where is the number? The number came out this morning, right? Whatever. It was basically 310,000 jobs, and everybody's saying yippee yahoo. Guys, let's just go back to this article and look. Where's that number that I highlighted? There are, let's see here. Give me a second. I read this thing like 2 hours ago, and I just can't remember. I'm just going to ballpark the numbers if I can't think of it. So there's 10.9 million jobs that are open, and there's basically 8.5 million people that are unemployed. So the numbers don't make sense if you look at it that way. Here we go. That's because the aid is supposed to help the unemployed people hold out for a job that suits them well. So it may take a little bit longer for them to find their match. Last time I checked, there's people out there that are saying, we don't care about your skill level, just come to work with us. Michael Asante just said, I own 2 restaurants. I want to sell everything and one be trading with Mo. I like that. All right, guys. So that's that. Hey, I don't know. If you want to keep listening to the lies that they tell you, have fun. Oh, Janet Yellen, former chairman of the Fed, urges Congress to raise the debt ceiling limit. Here we go. So she spoke to the Speaker of the House, Amir, and she said, Amir, specter of the U.S. default can have a drastic consequence for the financial markets. Of course it can, because you just are totally irresponsible. Yellen reiterated that lawmakers have until some point in October, I think it's October 21st, before the department exhausts and extended efforts to prevent what would be a historic default. A delay calls into question the federal government's ability to meet all of its obligations, which would likely cause irreparable damage to the U.S. economy and global financial markets. I do not believe that it's irreparable. It would take a long time to repair, but that's a little bit dramatic. Most economists say that the U.S. default could spark a severe economic downturn, sending borrowing costs across the soaring economy. So here's the deal. If you want to rally markets like they are, over the past decade, at some point you have to pay the consequence. The market's a pendulum, and it swings from here, which is negativity, and here, which is positivity. And if you are going to swing this pendulum all the way up to this positive side, and frankly, you're probably up here, it's not going to be good. You're going to have to come back down. I don't understand. I've never understood why we can't just have the pendulum swinging between negative, I can't draw today, and positive. And why can't we just be right in here? So instead of having collapses, so when we pull back in markets, we just go to here. Instead of swinging all the way up here and then swinging all the way down here. Everything has to be a crisis nowadays. Why can't we just be normal and not manipulate markets and just make things work? The debt ceiling prevents treasuries from issuing new bonds to the government. So, yeah, Congressional Budget Office. Look at this, guys. The Congressional Budget Office estimated in July that the new cap will likely come north of $28.5 trillion. And here we go. Unless Congress addresses the debt ceiling, payments of Social Security, Medicare, military spending, interest on U.S. debt, and other obligations will simply come to a halt. So, YOLO. That's all I have to say about that. Pump it, pump it, pump it. Okay, this is my favorite story. So, guys, I put this story out about in the Discord chat today. The Fed is in deep uncharted waters. If you have not read this, from what I posted. Please go and read it. I'm going to breeze through it right now, but you guys should definitely go and read this. It was very, very well done article. Fed policy has three key components, none of which have worked as planned. The post-2010 recovery was the weakest since the Second World War. Inflation constantly surprises the Fed, central bank, and which is the Fed, and markets keep rising to troubled and sometimes disastrous heights, even as the economic inequity it gets steadily more acute. So in QE, the Fed buys trillions of treasuries assets. So they're at 8.3 trillion, and this is in regards to the mortgage-backed securities and the bond purchases, treasury purchases that happen every month of $120 billion. The Fed thought that all of these trillions would make a major macroeconomic difference, in part by giving banks cash, which lend, and then boosting the growth. Obviously, that's not working. An important study shows, I clicked the study, but I'm not going to pull it up, that the Fed's portfolio has 10 times more impact on equity prices than output. So it's really not working to their advantage. The reason, the more safe assets the Fed takes out of the financial markets, that would be bonds, the greater demand for them. Then the lower the rates are, safe issuers such as Treasury need to pay, which is why we're seeing bonds so low and out of favor. And the more investors desperate for real returns above zero head to the bond markets. So the floor keeps sinking, even though the Fed continues to play with that rate. Guys, I really encourage you to go read this article. I posted it in the articles chat where Paul and I post different articles. It was just very good, lays it out very well and very simple. I think that anybody can probably read this article and really just understand it. Oh, here we go. This is where they talked about the repo rate. So even these fixes haven't worked as hoped. In 2013, when markets trembled, so the Fed stepped in and created the overnight repo rate, which I explained. I believe it was on Tuesday, maybe it was last Friday, to recycle cash from banks and money market funds. These are not small programs, obviously. Banks now hold $3.9 trillion at the Fed, and they're doing $1.08 trillion overnight with the repo rate. So where else do I want to go with this? Hold on a second. The Fed should understand that the U.S. economy is incoming. Okay, second. So, guys, go read this article. It's from Barron's. It's really good, and it just takes walk yourself through it and really start to understand these things. This one I want to look at a chart. So people, I've had not even in Discord and stuff, but I've had people like my mom called me and asked me, like, what's the deal with Pfizer stock after FDA approvals and stuff? So typically after FDA approvals, really, to me, like I've said many times before, I don't think that things are baked into the cake of the market. When we say that, let's say, I'm going to go back to like 2018, 19, when China trade was a thing, and we were negotiating with China and everything, and people were talking about how the China trade is baked into the stock market. If we get some kind of trade deal, we're not going to get a big swing in the market or whatever. We got big swings all the time. So I liken it to the same thing as stocks. Moving up to the approval of Pfizer's drug, I think that a lot of it was baked in, and then since then we've had a little bit of a pullback. So let's pull up the chart for Pfizer and that's how I would play these things, because they're way more of near-term. I think they're more of near-term reactions than long-term reactions. I think this was around the approval date of the drug, and since then, because I think this was the run-up, and then here's the pullback. So let's see here what to do with Pfizer. So Pfizer's clearly a downtrend. I would not be jumping into this thing anytime soon. I mean, the approval's already been made for whatever their drug. I can't remember the name of their drug. Your volume is declining big time. I think a lot of institutions are leaving this stock right now, and you're heading down towards these moving averages. So in my opinion, I do not think that you should be getting into Pfizer right now. And I think there's a good possibility. Let's see. They've had an incredible run. Based on news. They're holding a support line, but you see they've been breaking down. So there's good support in here for the company at these different levels in the 40s, but Yeah, let's see what happens with that over a long period of time. What else do I have? Last one, Boston Beer. So Boston Beer stock, last month they had 20% pullback on one day, if you guys remember that. Just today, I guess, it's another 10%. And I find it funny that all of this comes down to their seltzer drinks. Guys, smash the like button for me. Let's get this thing way up there. Look at this thing. It's down just under 9% this morning, 510. Let's see here. Just over a month after their 20% fall amid nasty earnings, they show warnings of slowing in their seltzer demand. So if you go to down here to the bottom, their hard seltzer has dropped 2.8% in the last 4 weeks for demand. Sales have slowed over a 5-week period. Boston Beer said they'll do write-downs on hard seltzers and experience higher costs to get rid of financial statements and stores of excess product. The different analysts have moved them from $804 price targets to $530. So analysts move markets because they create negativity. $618 was their another share target price. Now they're at $564. So if you want to, guys, I would keep an eye on them. I think their reaction is pretty dramatic for no reason. I shouldn't say no reason. I think it's just an overblown dramaticism. That's not a word. Hold on a second here. Let's get this thing going. Okay. Well, that crapped out, so we'll have to use something else. Anyways, let's just go and run through this stuff real quick. Maybe that'll load up. Treasury yields are pretty much the same. Let's see. Do we have earnings coming out? Lululemon reported yesterday, was it? They're up 13% right now. Kroger reports tomorrow, so just be conscious of that. And if you want to join our software, guys, let's see here. $7 gets you access to our Discord. Over 5,500 people in there. If you want access to Discord and software, $27 a month gets you that. And guys, you guys are going to be, and this is everythingmoney.com. You guys are going to be locked in at this price basically forever, and we're going to adjust for inflation. And it's actually better to come over here to everythingmoney.com because we're not large enough to charge you sales tax yet. So it behooves you to come to everythingmoney.com. If you want to join the Bid and Ask Nation, $77 gets you that. Access to me, access to the Employed Trader series. Everything is big. People are making so much money in there. Caesar showed me his returns yesterday, I think it was. The guy's up like 400% or something this year. It's nuts. And that's all day trading. So if you're interested in day trading, there's a great day trading channel in there. One-on-one session with me, $750. 1 hour Zoom call. I did one yesterday. I'm doing one tomorrow. I think they're big time benefits to people. And if you want to do a real estate deal with Paul, hold on, let me move the screen over. There you go. If you want to do a real estate deal with Paul, and if you're buying an apartment, rental property, anything like that in this market, and especially if it's your first time, $10,000 for 4 hours, $2,500 an hour will get you that. And I definitely think it's beneficial to do that if you want to do that. So, okay, here's Sam. Let's see what Sam is doing. So Sam had that big gap down, crazy run up. This was COVID down here. Hold on. I know you guys love to see my face, so I have to keep it on the screen, even though I don't really like it being on the screen. I don't think it's worth it. This was COVID, and that is an incredible run up. They have had that massive gap down. They said it was because declining seltzer stuff, and here they have another little gap today. Oh, actually, it's a pretty big gap. So that they're coming down to hold this support level. Wow, look at that. Take a look at this. Let me just try to zoom in just so I can make it a little bit bigger. If you just draw a straight line from here straight across, that is a pretty straight line. Look at that. It just fell exactly to that support level. So this is why I say, guys, learn to identify these support levels. Look how easy that is. That's incredible. So, all right, give me some stocks, guys, and we will run through them, and we'll go from there. All right, let's see here. So that's Sam. What do we got? Mo, I'm interested in taking a long-term position in Intel. All right, let's look at Intel. There was a guy who messaged me yesterday in the Bid and Ask Nation. He said, "Hey, I just made my monthly salary on a day trade." So that was pretty dope. Following the rules, not just doing whatever and throwing all his money at it. Following the rules. So Intel's tough because it has all these gaps all over the place. We're finally getting some kind of trend up. Now, excuse me, you know that you need this red line to get into the sweet spot where we're moving up. So that is what you're going to need with Intel, but keep an eye on it if you want to go long term on this thing. Dick's, let's see, Dick's Sporting Goods. So, I mean, guys, after I'm going to just keep saying this over and over. After you get big gaps up or gaps down, please take your profits. It pops up like this, and you might get a couple days of a run, but you're always going to pull right back down, and here you are pulling back down. So if you're in Dick's, please take your profits. You've still made money on that gap up right there. Now, if this thing breaks out, if this thing starts moving up and going to all-time highs or high 1-year highs, whatever it is, go ahead and add to it. But you can see that the volume is decelerating. You gap down this morning. Actually, yeah, you gap down this morning, and now you have no support. So let me show you this. So here was that gap up, and you have absolutely gapped down to that level. Now you have no support down here. So this thing is going to come back down to $115 area. So take profits on it because it's going to come down. All right. Let's see here. Bristol Myers swing trade. I like that. Well, I don't really know what you're swinging here because you are completely on the bottom. This is almost something that I have not seen something like this in a very long time. You're basically seeing a dog stock swing trade. So really what happens if you pull up any swing trade, of course it would be Bristol Myers that does this. Really what happens if you see your stochastic go like this. And it's constantly going up and down. You're not seeing like on a long-term chart when you get to the bottom here and you just go sideways. But of course, Bristol, who has some of the worst management in the pharmaceutical industry, they would be down here beaten down. So this is basically a dog stock, I guess. I don't know. Just wait until this thing pops up into the sweet spot and go ahead and do it. Now, if you want to short it, I don't think that's the worst idea in the world. You might get a short. You're going to face some resistance just above $63, but it's not a bad play on that side. Next, let's see. Oh, let's go back to Dick. Somebody said, "Why not short it?" So you can. To me, I wouldn't short it over here, but I would absolutely short it over here. You have a good trend coming into the sweet spot on the downside. Yeah, go ahead and short that. This is a good looking short. I bet you'll get it to $114. Just keep adding or just take a position on engulfing candlesticks. When you get here to this resistance point, you'll do very well. You might want to take some profits there at the 25-day moving average, but yeah. I'm planning to buy Alibaba. Is this the right time? Planning to hold for 1 or 2 years? Yeah, I think it's the right time then. I mean, you really have no idea when is the right time. It could go to $100. Who knows? And then you're going to say you were wrong. But if it could go up to $400 tomorrow. I have no idea. If you think it's a good stock and you've done your analysis on it and you understand the risks that you're taking and you understand why the stock can go up and why the stock can go down, then it's the right time for you. Okay. Neo short. I would be shorting this from a swing trading perspective. I think you'll get this thing down to just above $36 that's where you'll face resistance. Now let's zoom out a little bit more. Oh man. Okay. And what do we got here? $30? Yeah. So I would short Neo, from a swing trading perspective. I wouldn't have a problem with that. You have no moving averages holding you up. The volume is clearly declining. Yeah, I think it's a good looking short. Next. Airbnb. Let's do Airbnb. I said it before the show, so let's take a gander at it. I like it from a long-term perspective. I like it from a swing perspective. Now, the only thing that I want to see, I got to break out above these candles. So I got to get up here. I got to get one engulfing candlestick, and I'm going to get a really nice run on Airbnb. So it's on my watch list. It's number 1 on my watch list. Just going to keep waiting for it, but I like it. And swing trade's the same thing. If you get an engulfing candlestick up, go for it. Shop has an amazing trend. From what perspective? So on the downside, this is great. Guys, if somebody wants to practice shorting, who has done paper trading, shorting, who's comfortable with it, who's ready to take a position shorting a real one, this might be your stock. You had a really nice engulfing candlestick today. If you get another one today, you had a really nice engulfing candlestick yesterday. What am I talking about? You get another one today, go for it. It looks great. Long term, you're technically an uptrend, but this thing is just going so sideways. It's just consolidating in this range. But over here, I really like this from a swing trading perspective. It's going to cost you a bit of money, though. All right, CAH. Let's see what CAH is doing. So I'm assuming that you're asking this because you like the gap down that happened on earnings. For me, I just got to wait until it moves into the sweet spot. You're going to have, I think you will not get into the sweet spot until you're above $55 a share. So you'll be above the 50-day moving average. Excuse me. I don't know why I'm yawning. All right. Nike short. I like that one. Nike short. I like Nike. I'm wearing a Nike sweatshirt right now. Okay. So I like Nike short. I like the idea of Nike short because I have this gap here. Now, you can't do it now. And cash, obviously, you can't do it now. Just let this thing get into the sweet spot. As soon as it does, short it, man. Yeah, this is great. You're going to face a little resistance at 157. You're going to face a little resistance at 152. But eventually this thing is going to come back down here to 132, 133. I don't know when. Could be 6 months from now, but it will. So keep an eye on that one. Do we need stop losses for swing long-term trades? If a pullback nears the stop loss, it all comes down to comfort, guys. Like if I'm doing a swing trade, I have a stop loss in there. If I'm doing a long-term trade, I typically don't have a stop loss in there because my trend is so good that the only thing, if I get like a big gap down, the stock price is likely going to go through the stop loss and it's not going to get executed. So day trades absolutely have a stop loss in. Swing trades, yeah. It would behoove you to have a stop loss in there, 3 to 5%. Long-term trades, with comfort comes, with experience comes the need to not have stop losses, but it's completely up to you. All right. Let's see here. Zillow. Let's do Zillow for shorting. Zillow. Okay, so Zillow is. So I would not short Zillow now from a long-term perspective. You're starting to creep up there. You pretty much missed the short. Now, from a perspective of swing trading, yeah, this looks good. If you get an engulfing candlestick today, you got your first one yesterday, it looks really good. If you get a follow through like that today, go ahead and short that thing. So what was my other one? Cash. I said Zillow, and something else was a good swing trade. Damn, I don't remember. All right. VJ, SIVB. You got it. SIVB. SVB Financial. Okay. Let's see. Oh, you're asking me this because it gapped up so much today. Okay. You're asking me because it gapped up so much. Okay. So if you were short on this, which I would not have been short on. You never had a good shorting buy signal. So yeah. VJ, can you clarify what you want a little bit more? Paul, Seth is saying yes to that he is ignoring you. Guys, smash the like button for me. That would be wonderful. All right. Pins. I love pins. I love pins because you can. Yeah, I mean, this gap is going to fill eventually. I really like this one. Just wait for some buying. Actually, not even wait for buying volume. Wait for volume in general. Look at that volume. That volume sucks. So just wait for volume to come in there. It's on my watch list. It's going to be good. Shopify. That's what it was. Thank you, Spider. I'm going to call you Spider. Shop. So Shop is going to be a little expensive one, but yeah. You reckon new Apple will launch the stock further? You know what? I don't know. Apple historically on reveal day it depends what these idiot analysts write about the day right after. So they either like it or they don't like it. And that's what it comes down to. I personally, I mean, with what they're saying Apple's going to come out with, they're basically saying that it's going to come out with new phones that, frankly, I think they're kind of not revolutionary. The only thing is revolutionary is maybe satellite if they have it in the phone. AirPods. I mean, AirPods are the number one selling headphone out there, so that'll be a good driver of revenue. Apple Watch Series 7. I haven't kept up with Apple Watches since Series 2, so there's that. Now, where is VJ? I'm holding at an average of 565. Thank you, VJ. Let me get back to that. What was it? SIVB. 565 VJ. And you gapped up. Well, interesting time to buy, but the market is now open. VJ, if I'm you, man, I mean, if I'm trading this from a charting perspective, you're in a downtrend right now. If I'm you, I'm selling the stock. But that's just me based on charting. If you're doing this for other reasons, maybe you are doing this from a value perspective. I don't know. Then I don't know what to tell you. But from a charting perspective, VJ, I would not be in that thing right now, just because of the overall trend. Prior to joining EM, just wondering when I should sell if you don't mind, Claude. Tell me where you bought this thing. I'd be happy to help you. This looks like a hype stock. Oh, no, maybe it doesn't. I have no idea. Anyways, it gapped up. So here, let me zoom in real close. So it gapped up right here, probably on, nope, I don't know what the news was, but that's likely going to fill. You see that the stock price gapped up, ran up, and then it's coming right back down. So it's probably going to come back down to its 200-day moving average. Just tell me where you bought it, and maybe you'll do that. So GSAT is the company Apple is talking with about the satellites. Yeah, that's interesting. I said Airbnb. Yeah, Airbnb is something that I like. Claude, give me the answer because I'm gonna get out of here. I gotta go to the studio. HPQ. Why don't we do HPQ? HPQ, HRB, or big? Just pick. Off the top of my head, I think it's HPQ, but I really like big. I like that business more. HPQ though, you could short this thing. If you get an engulfing candlestick today, go ahead and short that. Yeah. Okay, Claude, let's see. VRTX, right? Viking. VKTX. Okay, so you bought an average of $5. Yeah, I mean, your trend is still fine. You're really just your trend is still fine. You're snapping back a little bit, but I do think that you're going to come back down here. The overall trend is still up, Claude. That's the good news you got going for you. But how soon can that change? I don't know. In my opinion, I would have taken profits on this run up. So basically, I would have taken advantage of that gap up. So if I'm you, personally, I'm taking profits on that. Maybe you can leave your initial investment in there, but as soon as that red line dips under the yellow, exit that thing. All right, guys, you have a great day. I will see you guys on the live stream at 2 p.m. If you're in the top tier, bring us any questions that you want. We really like the open discussion, and we'll get to it. You guys have a great day. See ya. Wait. I need my clout. Follow me on Instagram. Then see ya. At TraderMo_EM, at Paul Gabriel, at Seth Kirchanen. We love you guys. Have a great day. Peace.